Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be talking about the stock market plunge that took place on Christmas Eve, the 24th of December 2018. I released this article here on Sunday. I found this and released it called the Plunge Protection Team. So top Trump official has called the bankers in order to convene and create the Plunge Protection Team. So I thought this was a very interesting article, especially here on Sunday prior to the markets opening up on Wednesday. So here basically they came out, said that this Treasury had spoke with the chief executives at Bank of America, Citibank, Goldman Sachs, JP Morgan, Morgan Stanley, Wells Fargo. The CEOs confirmed that they have ample liquidity available for lending, the Treasury has said. So, interesting article. This will be in the description below. Also, it is on my Facebook page. I got some almost 300 followers over here. So if you guys aren't following me on Facebook, on Instagram, check out the description below. Also, if you do like the video, hit the thumbs up, subscribe to the channel if you are not yet subscribed, and leave me a comment either over the video or just a comment and question that you may have. So, it was a crazy day. So today, down market S&P 500 sold off 2.71%. So here in the day, we actually started off, semi-positive there. We did dip earlier in the day, right around 8 o'clock when the markets officially open. I'm not sure of the time frame here, but it was sometime earlier in the day. Now, as of those lows, they bought into the lows, popped it higher. But as this news spread around that the top Trump official has met with the bankers, that sold off the market. You can see high volume here towards the end of the day as investors are just throwing in the towel, no longer wanting to, stay invested in this market. This is too much for them to handle. The Dow Jones here down 2.91%. Again, had a pop earlier in the day and then sold off hard as news spread of this meeting. So year to date down 11.84%. The NASDAQ here down 2.21%. Year to date down 10.29%. So we're going to go ahead and switch here to the 3-month on these graphs, and we can see here how fast the indexes have sort of sold off. So S&P 500 down 19.47%. We may open up low on Wednesday, and we may be officially in a bear correction here, bear territory. Opening on Wednesday, Dow Jones down 17.96, NASDAQ already in bear territory, down 22.52. Russell 2000 has already been there, down 25.71. Here, the Russell didn't quite sell off as fast and as hard as the other indexes, but it has already sold off 17.49% year to date. Now, the emerging markets there, down 0.93, not a whole lot to do with the economy here in the United States. Now, stock futures currently looking extremely bad here, down 3.28, 3.10, 3.42. So if the government continues to stay shut down or a partial shutdown, we may continue to see the stock market continue to sell off into the week, ending 2018 as one of the worst years here in quite a while. I believe maybe, I'm not sure when's the last time we've gone down this hard within a year. I believe maybe 2014, 2000, somewhere in that time frame maybe. I'm not sure. I would have to look back at my history, but I think it's a great year to be invested. If you are now starting your stock market career and stock market journey, this is a great time to be starting because you're investing just a couple $1,000s here, a couple $1,000 here. If you're investing and you're starting your own self-directed Roth IRA, you can only contribute $5,500. If you have another 30 years on top of that, 30 by 5, that's $60,000, I believe. I can't do math right now. It's 3 in the morning, so $5,500, and you got another 30 years to invest. That's an additional $165,000. You're going to be put it into the market. So what is your money working for you right now going to do for your future if you're able to buy at these discounted prices and just kind of continue building up your portfolio? It's going to be recovering here in the future so long as you're investing in sound companies. Don't invest for the price, invest for the company. Know that the company is going to be continuing to improve and move higher, produce products or services that are going to be worthy and driving that company higher into the future. Don't invest in companies that are going to be dying off here. Retail companies such as Sears, competition out there is fierce. So be wary. Invest in sound companies and you'll be, pretty, or just invest in the S&P 500 anyways. So anyways, after hours, we had Chesapeake here. Remember, energy is a big safety, utility here, energy, healthcare, consumer goods. This is where money is rolling into right now. So we can see here, actually we have Zynga here, down here towards the bottom, some of the most active stocks here in the after hours. We have Bank of America going down slightly there, Intel down slightly, Chesapeake back down here again, PNC Financial, so that's interesting. Financial institution here going positive here in the after hours. That's very interesting, whereas everything else here is negative. Apple continuing to sell off now at 146.75. I don't even want to look at my Merrill Edge portfolio, but we are going to be doing the 1 month recap here shortly, and you're going to see all that bloody mess here. So Apple, along with many other companies here, Microsoft selling off those highs. They were the sort of trophy that everyone is moving into. Why would you be buying Microsoft at 52-week highs? But people were doing it. They were buying Microsoft at 52-week highs. But now they're selling out of it now as it's trading even lower. It's lost quite a bit here just within the last few weeks. But investors are no longer wanting to hold on to this. They want to go ahead and sell it off because maybe they lost faith in the company. But either way, all sectors of the S&P 500 were hurt today. There wasn't a safe place out there. We had gold and mining corporations. They were doing fairly well. If you look at silver, gold, they were positive. You can see the majority of the utilities here were in the negative. PCG was the only positive there. So my Southern company, my Edison International, those did not fare well today, but that is just more money that's going to be able to go into them and increase my dividends and my yield on cost there. So I'm happy. Financial sector down 2.11% in addition to last week's loss of 5% across the week. Home builders down today 2.23. Energy, don't want to worry as far as what the news is on that. We'll cover that in the weekly. But oil here sold off 2.93%. The dollar today, dollar here went down lower. So that lower dollar usually drives up the stock market, but we have so much negative news out there in the stock market. It's really hard to prop up this market. Trump, the Fed, they really can't come out here and just try and prop it up for more than a day or at a time. People don't buy the bluff anymore that the economy is still great. Look, jobs are out there. There's tons of jobs. I can go out there and probably get a W-2 job very quickly as far as jumping from one position to another. My pay may stay about the same, but there's always, there's multiple jobs out there to jump into. There's, unemployment is at record lows, but can we really maintain it? Have we plateaued to the point where we can no longer accelerate and create more jobs and create less unemployment? Or have we plateaued to the point where, we can no longer grow those numbers? Also, easy money is no longer attainable. Small cap, mid cap, large cap companies can't just go out there, get a loan at 2-3% and just be able to build their company much faster at faster paces than they were in the past. Now, if you go out there and get a loan, if I get a mortgage on my investment side, on my business end, I have to get a loan over 6%, 5 to 6%. Whereas just a few years ago, I was able to get a business loan or a HELOC or something like that at a rate of 3 or 4%. So it's much more expensive to go out there, get debt in order to build your business. So that's going to be slowing down these companies. You're not going to be able to expand. You're not going to be able to use debt in order to create your revenue, your net income. You have to slow your pace down and kind of work with what you got. So that's going to be slowing down here in the future. Silver Trust up 0.95% today. So I am maybe taking a look here. No, I'm not. I'm just kidding. Gold shares, ticker symbol GLD, up 1.10%. We talked about this in the weekly recap. If you guys have not heard of ticker symbol BAR, this is the Granite Shares Gold Trust. Very similar to GLD, only the expense ratio I've heard is slightly lower. So I know a lot of you guys out there are investing in silver and gold there. Bonds staying, up 0.02. That's basically flat, but that's what you're holding bonds for. I still don't like bonds. I will just continue to buy into my dividend stocks as we go down further and further into the recession. This is a great time. This is just like 2008 when I was investing, but I had very little capital back then. So as the market goes down further and further, there may be a point where I may be just dumping a lot more money into the taxable end, but we shall see how that all sort of plays out here in the future. So 10-year down to now 2.75. So we'll kind of remember this. 2.75. I believe we were just at 2.76, 2.7 here on the weekly recap. So we are moving here slightly lower. I believe that 3-year has stayed the same. So not a lot of change there. So that is basically it. So the market sold off hard on Monday, on Christmas Eve. It's actually the 25th right now. So it's 3 in the morning on the 25th of Christmas. You know, we all sort of just went, the rest of the family went to bed at 12. So I'm up here on my computer. But hey, happy Christmas, you guys. Don't worry about the market. It'll fall. It'll recover. You know, if you got a long time as far as investing goes, this is just a little blip on the road. Take advantage of this to buy into great companies, regardless of the stock price. The stock price will fluctuate, but the company, as long as it is sound, as long as it's producing products or services, you know, products and services that consumers will want and use, then that company will have a sound future. So that is it for this video. Quick disclaimer, I am not a financial advisor, tax professional of any sort, so I am just a financial investor myself. This is all for fun and entertainment. If you guys did enjoy the video, hit that thumbs up button below. If you are a brand new viewer and subscriber, you know, subscribe to the channel. If you're a recurring viewer, hit that subscribe button below. I highly appreciate it. And if you have any comments, questions, let me know in the comment section below. And I will see you guys next time. Have a great Christmas, and I will see you in the next video. Bye-bye.